Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Forsick from Elite Currency. Let's get started. Euro dollar daily chart making a deep fall, but not all the way down to 120. In fact, the bear flag that I was looking for did not take place. Instead, we had a pretty bullish daily candle yesterday, and I think that does change perspectives a little bit because when looking at the 1 hour chart, for instance, what I was looking for was more like this kind of angle. Maybe hitting 121 eventually later today, but this angle is steeper, right? With the fractal sailing above the 20MA, the HMA crossing above it, and then breaking above that fractal, indicating quite a good momentum. In fact, all of this I explain in my SWAT course, which focuses on patterns and moving averages, fibs, and fractals. If you're curious, of course, feel free to join and become a member. Now, so this momentum, to me, looking more like a five-wave pattern that's completed. The bearishness is not that strange. Looking at the resistance zone here, the long-term moving averages, and the five-wave completed. But because of the strong impulse up and the five waves, I think I'm leaning more towards an ABC down and then another swing up again for a bigger bullish ABC pattern here. Let's put that in perspective. So we had an ABC down. I think that this C is completed now because of the strong up, and I'm expecting an ABC up maybe to the head and shoulders level here. For instance, this head and shoulders level here at 122.75. Of course, 122.50 is strong level. We could put a fib from here to here and look at the fibs, and we see 50 fib at 122, 61.8 fib at 122.40, and the 78.6 fib. Any of those three fibs really could be the turning spot, and could complete the ABC up. So for the moment, this looks like ABC down. I'm expecting an ABC up anywhere into these fibs, and the deeper it goes, the more likely it is to be an ABC flat. So if it goes into the 78.6 fib or 88.6 fib, it's probably ABC flat. What does that mean? That means we expecting five waves down after that to test the previous bottom and make a bigger correction like that. If it goes to the 50 or 61.8 fib, then I'm wondering whether this is not a 1, 2, 3, 4, 5. That's also possible, and that's an A of a zigzag. This is a B, and then we can also expect five waves down, but deeper because of the ABC zigzag pattern. So that could be possible as well. Or, of course, there's another alternative if it hits these deep fibs, but shows three waves down. It could be a triangle pattern, A, B, C, D, E, as well. So for the moment, I think those are the most likely scenarios. We see that price is breaking below 20MA. I think that an up and a down could also make kind of a bull flag pattern as well, and that could indicate a continuation chart pattern in the intermediate term. When looking at the daily chart, of course, eventually price could break that bull flag to the upside. That is what we normally would expect, at least. So that's about it. I think I would expect a down, an up, and a down for the wave B. And of course, if it is a zigzag, price cannot break through this bottom because then it would invalidate the bullish ABC up. And if it does that, then my analysis is out of the window and invalidated, and we'll probably see a continuation down to 120, which could be support. Of course, 120 is around psychological level, and price could bounce back up then at that spot. If it breaks this top, it could still be a correction, but of course, in that case, it depends a little bit on how price moves up. If it really shows a very strong swing up, then it's maybe not a wave C, but a wave 3. And if it then shows a bull flag, then more upside is also likely. This scenario does not seem that likely to me, but just sharing all my thoughts and scenarios here. Let's, I guess, move on to the pound USD. So pound didn't get a bull flag either, or bear flag. Momentum was too strong to the upside. Respecting, broke above the 20MA, made a pullback, bounced, breaking the 144 and 233 EMA zone as well. Everything is aligned to the upside. So basically, this is like a cushion that price uses as a support for a bounce, and it did that, and it rebroke above those long-term moving averages for a good push up, like it did here as well, as you can see. So, although I was leaning towards more downside if we got a bear flag, we didn't get the bear flag, and because of the bullish price action here, these three candles here, I think indicating a candlestick pattern, From that moment on, I flipped actually to the upside again, and I think that a continuation higher is more likely. Now this spot is not that particularly good. I think it's too close to resistance. We do have a triple top here. I don't think it's that attractive here at this moment, but if it does make a dip down like the euro dollar, then at this moment it started to more look like a ascending wedge. Let me change that trend line here a little bit to make it solid. There we go. And it is looking more like an ascending wedge to me at this moment. So if it makes a slight pullback here and bounce, I think it's going to break the top and move up to 137.50, which is the next quarter level. So on the hourly chart, this could also be an ABC pattern. Look like the euro dollar, looking for a bounce there at that trend line. Let's put a fib on. You know, depending on how fast this moves down, if it moves down, 61.8 fib looks good around 135.77. Maybe even shallower at the 50 fib in the long-term moving averages. Depends on how the correction takes place. If it's a bull flag, then 38.2 fib, 50 fib zone is more likely. Of course, it could move up a little bit more first. It could hit WIS 5. It could hit WIS 5. It could hit the top first. But to me, I would like to see a retracement first before trading it. Maybe the retracement doesn't happen. In that case, I would miss this. But I just don't see, you know, it as a very good spot because the target is quite close, 137.50. The stop loss, in my view, needs to be preferably below this bottom, to be honest. Maybe below the trend line, although that's a bit riskier. Reward to risk doesn't look that great. You know, the potential upside compared to the stop loss just doesn't look that great at this moment. So I'd rather wait for a pullback, in my view, either now or a little bit later. And then I do think that the upside looks good. Unless there are 4 clear, very strong bearish candles here. If there are 3 bearish candles, you know, in a group of 5 candles with the last candle not being the weakest, and some good volatility in that, then I would say that the upside is over. And then in that case, if we get some candles like this, for instance, something like this, then I think it's threatening to break the support trend line, and I think there's a good chance of a bearish breakout in that case. Okay, so that would be the alternative if there's any strong bearish price action unfolding. All right. If you would like to give your feedback on Elite Currency, my videos, would appreciate that on Forex Speed Army, FPA, or Trustpilot. And of course, we have a lot of live webinars. Please join those as well. And if you're interested in my SWAT method, you can become a member either by paying the subscription, or it's not a subscription, it's a one-time fee actually, or by joining a partner broker through Elite Currency, and then you can also access it for free actually. So there are some options there. So that's about it. Wish you all great trading and see you next week. Cheers.